Yeah, and I'll give very quick answers so that my staff don't get agitated that I'm overstaying.
Hi ma'am, hi sir. I am Saksham Yadav, first year student in the Department of Economics, pursuing masters. So our government has recently expressed its wish for privatization of the banking system. So my question is, how are we going to manage it without compromising with our aims that were in 1969 before the nationalization, which included financial inclusion as well as greater penetration in the rural and more needy areas, and also the funding for long-term projects? Thank you.
We can take one more question. Please keep your question very pointed.
Good afternoon, ma'am. I am Bankim Chandra, second year student at MA Economics program. Ma'am, my question is that given the aspirations to achieve the status of a developed nation by 2047, how are we planning to strike a balance between the much needed productive investment and an ever-growing number of populist schemes like freebies so that the latter doesn't crowd out the former? Thank you.
There was this question on privatization of banks. I'd kept out of talking politics, but I have to now. See, nationalisation happened, and all of us, at least those of us who were there at that time, whether you're a child, your parents would have spoken about it and so on, who said, oh wow, noble idea. Noble it was. But in the 50 years after that, financial inclusion hadn't happened as much as we desired. Let's admit that. Of course, what the banks did, and to their credit, was to take a lot of these priority sector area lending which had to happen in the villages, far-flung areas, and so they went with the government programs and gave it through banks to the people. So those objectives were met, I'm not denying that. But in the name of financial inclusion, keeping banks under government control and not allowing them to professionalize themselves meant that the government had to infuse capital every now and then. Oh, money we need, for developmental work, for taking greater banking in regions which are difficult, and so on. And also the misuse of banks by those who thought banks are ours caused this difficulty about the balance sheet in the banks. You had such a mismatch of asset versus the liability that you had. The quality of assets suffered. Now I was happy to hear the question on microfinance and the kind of asset quality and so on. But that was the case of concern also of the larger public sector banks. You must have heard this expression of twin balance sheet problem, 2012-13. To correct that took us nearly 6 years after Prime Minister Modi came into power. And now I'm confident to say our Indian banks stand out exemplarily in terms of the asset quality, in terms of the NIM, in terms of the asset and credit which has got to be done, and also in terms of financial inclusion. That Jan Dhan Yojana, being a very big scheme through the banks, actually took to the last individual banking in India, made them be part of the banking, made them be part of the formalization of the Indian economy. As a result is why during COVID you're able to transfer money directly to their accounts. You didn't have to put a check. So I think banks reached that position after the correction, And despite 50 years of post-nationalization, the objectives that were to be achieved could not entirely be achieved. But after that, when we professionalize the banks, those objectives are still being beautifully achieved. So this perception that when you try to bring in banks to become professional, and if you want to privatize them, which is a cabinet decision, that objective of reaching to all people, taking banking to everybody will be lost is incorrect. Once you allow the banks to function professionally and allow them to have board-driven decisions, every objective of the national interest and also the banking interest will be served. Funding for long-term projects. I'm sorry if you just said it without much thinking about it. Core banking for banks like this, the commercial banks like this, is not for funding for long-term projects. And in fact, that was one of the wrong things which happened. You borrow money, or your accounts are kept like the CASA accounts, which are current account and savings account, for which there are no minimum balance charge or any of that kind, and the interest rate is minimal. With that money, you go about long-term funding. You're not able to get that money back when the account wants the money back. And that's where you need development banks. That's why earlier IDBI was set up, but then many things happened and IDBI did not any longer fund long-term projects. Now, of course, we have a NABFID, National Bank for Development of Long-Term Projects and for in industrial development and so on. And there are banks specialized for long-term funding. So the commercial banks as they exist, the public sector banks largely, are there for doing the core business of banking. Take money, keep it as deposits, lend money, make money out of it, and serve the deposit holders and also your borrowers. So let's not mix up. That's one little observation.